Hello, hello, hello. Thank you tuning in. Crypto Street Podcast. This is Crypto Dale coming to you live from cold ass Iowa. Snow's on the ground. We're going to be hitting the low teens this week. So I will be freezing my ass off. Tuning in again, like I said, Crypto Street Podcast. We've got pretty exciting guest tonight. We'll get to him here shortly. But as always, I'm joined by my two amigos, Prince and Killer. What's going on, boys?
Living. I'm just living.
Hey.
Cold weather. What is this cold weather you speak of?
Seriously, You're going to do this again?
Do this again.
That's the only thing I have. I don't know.
Me and Dale are pretty much in the same climate right now. We're just freezing our asses off.
And while, what was it, the last episode before we started, we were talking about how cold it was, and Killer, you're like, oh yeah, it's freezing here. It's like 50.
I had to put on a hoodie the other day.
Yeah.
Boy, I'm a pussy.
I couldn't wear my muscle tee when we were out.
Yeah, if I had any.
Jeez. Sun's out, guns out. What's going on, Killer?
Hanging in there, man. The markets are, as they have been lately, a bit boring, but we're trying to make the best of it. Certain alts are popping off here and there, but nothing to write home about yet. But I'm sure we have some current events we'll touch on at some point. Yeah. How you guys doing?
Doing all right. My son, I think, is getting an ear infection, so that's going to translate to no sleep for me tonight, or last night was none. So that's always going to be great. I'm excited about
just
that.
Dad things.
Just dad things.
Just dad things.
Yep. Prince hockey.
How about
still?
Oh man, yeah. I'm coaching a few different teams this year too, so I'm just busy as hell right now with the rinks and all that stuff. But you know what? When you're coaching winning teams, it's a lot better than losing teams. So
Coaching losing team is the worst.
yeah, it's like, what's the point, right? It's like,
Prince, didn't you guys have like an altercation with like a ref not that long ago?
Oh,
or wasn't there some kind of thing?
I did. Yeah. So, well, you know, you get a crappy ref, and sometimes you just want to give him a round of applause and let him know, you know, what a performance he put on. I guess he didn't like the round of applause I gave him. He thought it was a little sarcastic in a sense. I was being genuine. He fucked us, but, you know, c'est la vie. We go on to the next one, right?
Was it a team you should have lost to?
No. They're a good team. They're a good team. They're in the South, though. Different division than us.
So they're in Minnesota. All right. Moving on. We should probably quit our blabbing and get to the real reason everyone's probably going to listen, and that's our featured guest, Crypto Rogue. You can find him on Twitter at Crypto Rogue. So, Rogue, thanks for joining us tonight, man.
Thanks for having me, guys.
Appreciate. I love you on Shitcoin Talk, so I got to give them and those guys over there a shout out. I think it's a great show. Always enjoy hearing your TA insight on that show. So we were pleased you could join us tonight.
Thanks. Yeah, we love that show. We're glad to hear you guys are fans.
So let's just kind of dive right in. Get to maybe give a high level overview of how you got into crypto. A little bit about your background.
Sure. I got into crypto the summer of 2013, right after the Greek crisis, when Bitcoin started making headlines. It did that spike to like 268, and all of a sudden it became a thing. That was kind of the second time I'd heard of it. I'd read about it, I want to say, in either late 2011, early 2012, in a Wired article talking about buying drugs on the Silk Road with Bitcoin. And I'm like, well, I already have a drug dealer, so I'm good. And kind of just put that out of mind for the time being. So got into it then, and didn't know a whole lot about it. Actually spent most of the summer trading arbitrage, kind of just churning and burning funds to make like, I think at the time you could still make like 15 to 20% per Bitcoin if
Nice.
you knew how to get money in and out of the system. And then kind of really started getting into crypto as a whole once it started moving up there in the fall. We had that, that pump to 1100, and got into kind of the altcoin scene and all of that, and then been trading kind of as a hobby until September, October last year, where I decided to start trading full time.
Great time to get in full time.
Yeah, right before a year-long bear market. I know.
Yep. Exactly. Fantastic time.
That's what I thought.
I'm curious about this arbitrage that you were doing. Maybe, you don't have to go exactly into it, but maybe just for some of the listeners.
Oh, that was
what
easy.
might have been the process? Yeah.
So at the time, like, there are lots of services that you could sell Bitcoin for prepaid cards.
Mm-hmm.
And they'd offer a premium, like up to, in some cases, up to 30% premium on the current value of Bitcoin. Okay. So, you could basically go to Coinbase, move funds to GOX, or move money into Coinbase, buy Bitcoin based on your limits, and then send it to the dude and cash it out to like 8 different like cheap ass prepaid debit cards that only allow you to withdraw like $200 a day with 3% fees. So you end up going around town trying to find the damn ATMs that take these things to get your cash back to redeposit it. But at the time, like I think I was just using like $2,000 or $3,000 at a go, but I was making like on average about 20% profit each time. And it would take me like 5 or 6 days to do a kind of a cycle through it.
That's pretty legit for 20% for 5 or 6 days. Yeah, that's
it is quite a bit of legwork because you're running around with multiple prepaid cards, but it was just like I figured it was an easy way to make money since I had no idea how to trade at the time.
Just goes to show like how much changes that quickly. I mean, I remember, we had some episode that we did like November of last year, and we were talking to somebody who was saying that arbitrage is still very possible in crypto at that point. And I don't think that's really true. I mean, volumes are down a little bit at this point, but you do see some weird stuff like Finex being priced higher or lower than the consensus, but it's you can't really do that sort of thing with any kind of consistency anymore, I don't think.
It's just like I said, Bitcoin has gone from being a very inefficient market to a much more efficient market over the past 5 years. And you're going to see all those opportunities go away. The more the bigger players get into the system because they're going to milk those for all it's worth. That you already see them do that on various stock market exchanges. They're happy to try and take a 0.1% margin where they can. So, the couple percentage points you're still seeing amongst various altcoins in BTC, that's not going to last very long. I do know a couple of guys that have bots that do arbitrage on various altcoins across exchanges. But that's also, that can be a pain in the ass because you got to send back and forth to buy and rebuy. But if your bot's capable of withdrawing and transferring, it makes that a whole lot easier, and it can actually do it automatically. But even that's going to eventually go away at some point.
Can you talk a little bit? So you became a full-time trader September of last year, right?
Yeah.
So I think I'm sure I speak for a lot of people that a lot of people had ideas of doing the same thing at some point during this bull market, maybe even a couple of months into the bear market. So perhaps walk through what that experience has been like going full-time trading, maybe some trials and tribulations, and just kind of how you've navigated these rocky seas.
Sure. I decided to do it. I really enjoyed trading. I was kind of tired of what I was doing with my day job at the time. And I kind of wanted to change. I'd been doing the same thing for a decade at that point. And I felt like, and I still feel like crypto has massive potential. We're still kind of at the doorstep of what it's going to do and the amount of money you can actually make, which is saying a lot based on what happened last year. So, obviously I'd been trading in my spare time pretty aggressively and felt like I wasn't awful at it. I wouldn't say I felt like I was some sort of the second coming of Warren Buffett, but I felt like I'd done well enough, and I'd built up enough of a stack repeatedly, because I cashed out once to buy a house and then rebuilt my little cryptocurrency fortune after that I could kind of do this full time and make enough money on a consistent basis to earn a living. So obviously we all know what happened in Q4 last year. Everything went absolutely fucking bananas. And so that was kind of I made the right decision. And then 2018 happened, and now I was like, oh, what am I doing with my life? So, obviously 2018 has been a bit of a kick in the teeth for a lot of us. I think even if you have been trading as a hobby, there are a lot of things you start to appreciate having gone full time and having to really try and weather the stress of a downturn like this when trading is your primary source of income. It's very different from watching your stack go down when you're still collecting a steady paycheck, and you can always say, I'll spend less money and dollar cost average in this month, kind of thing.
Yeah,
Can
that's
you give like a oh, go ahead, Dale.
No, I was just gonna say, that's kind of puts it into perspective, thinking, how trying that has to be if, like you said, when you have a full-time job and have income coming in, your trades, I mean, they still matter to an extent, but that's your way of life. That's your livelihood. So, obviously it makes it a little more stressful. So.
Oh yeah, definitely does.
Have you found that the freedom of doing your own thing has been worth that additional maybe stress and a little bit of like sleepless nights, or what has that trade-off been like?
I mean, shit, dude, I was having sleepless nights when Bitcoin was in the 300s. So, it's nothing new. I really do enjoy trading, and I love the crypto space. You have lots of people who are like, blah, 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 go trade other markets. Like, I just really enjoy these markets. I mean, yeah, you can go trade other things, but like, that sounds a bit more of a chore than I want it to be. I do this because I enjoy it. And for the most part, I think the crypto community is a pretty fucking awesome group of people.
Yeah.
So, it's tough. It can wear you down quite a bit, especially, if you're one of those poor bastards who didn't cash out enough in January or December to see you through for a while. I think almost everybody didn't sell as much as they would have liked. I know you've had a bunch of guests on that have said the same thing. Yeah, they cashed out, but then I think I can double this, and that didn't end up well for all of us. So we all learned a bit of a hard lesson, which I think is those are the best ones. You sure as hell aren't going to forget this the next bull run. That's for sure. But so to me, I think the biggest the difference when it's your full-time income is that sometimes you end up forcing trades that you shouldn't, because you're trying to get some more money coming in, and you make kind of some silly mistakes. Whereas if you've got another income streams, you can be a much more patient and actually stick to your trading rules and your trading systems, and not get caught up in the chop or get wrecked for taking a dumb Hail Mary move.
Mm-hmm.
Can you walk us through like the general gist of your trading strategy for anybody who's not familiar with it? Just kind of like a little bit of what you look for and maybe what kind of trading strategy you aim to employ.
Sure. It kind of depends on what I am trading. So obviously, I think everybody should have a different trading strategy for margin trading and large caps versus the various sized altcoins. Kind of when it comes to Bitcoin and the other coins that you can margin trade, I try and stick to the tried and true technical analysis setups. You're looking for your bull flags, your wedges, your breakdowns across your various time frames. Things that look promising not trying to play kind of the middle range stuff, kind of find your highs and lows of the range, and then try and stick to kind of shorting the top of the range and longing the bottom, until we blow through either end. It tends to work pretty well for the most part, especially if you've been doing that the past 2 weeks, you've probably made some pretty good money. For altcoins, wait till nobody's talking about it, and then wait for it to start making an uptrend. And then you got to figure out what indicators work well for you that says it's kind of a safe buy. And then try and get in and ride the uptrend. I feel like a lot of people made really good money just buying absolutely anything when it looked like it was at the bottom. The problem with that kind of strategy in a bear market is you don't know if it's the absolute bottom. And while we had a crazy bull market where you could probably wait for it to skyrocket and collect your times 20 to times 100, I feel like in a market that we are in right now, you want to be putting your capital towards things that are actually moving, so you can make it work. You don't want to be sitting in a sideways coin for weeks or months on end, because at this point there's no guarantee anything's going to go up, and if it does, getting a double or a triple in an altcoin right now is a gift from the heavens.
Yeah. Has this bear period altered your kind of big picture effect, or your big picture view on crypto, whether you think it's here to stay or not? Have you ever questioned that? I'm curious because I've had, I don't think we're going anywhere, but there are some moments, when the price of everything's plunging and you're like, is there a use for 99% of this? And has that thought ever crossed your mind or anything? Maybe people don't want to hear this, but
yeah, I mean, obviously we all think that. I think obviously, having been around since 2013, I can't tell you the number of dead bags and wallets I have on various hard drives. They're just lying around with coins that just never went anywhere. The vast majority of altcoins are probably going to end up as dust at some point. I think that the whole crypto scene as a whole is still in its infancy. You have your maximalists who say Bitcoin's the one ring that rules them all, but I don't see a reason that we're not going to see some very good niche applications using some other coins in their blockchains. It's kind of like, who could have foreseen all the uses of the internet back when it first came out? Until somebody comes up with a really good idea and says, hey, we could do this and it'd be neat, and it catches on, you don't quite know. So what we're seeing is people try and come up with ideas. Lots of them are garbage and they're not going to go anywhere. Cough ICOs, cough. But there are going to be a bunch that will find a really good application, and people will end up using those coins and the blockchain for what the developers designed it for.
You think it's mainly a matter of the tech just really not being there yet in terms of scalability? I mean, I think just in terms of transactions per second, nothing is really on the level it needs to be while also being decentralized. I mean, you look at something like EOS, where they boast a lot of transactions per second, but it's hardly a blockchain, right?
Right. I think it's a combination of a number of things. If you're talking about trying to be Bitcoin's idea of the transactions per second, so it can be kind of like a real-time PayPal, MasterCard, Visa. We're not there yet. That being said, if you're doing interesting things like putting title deeds on the blockchain, how fast does your throughput have to be? Does somebody really need to have the title information end up on their computer and be confirmed in a minute? If anybody's bought a house, that shit still takes a few days to get finalized after you sign the paperwork. So it's a lot of it for various coins really comes down to the exact application. I think anything to do with instant transactional, they're trying to replace you using cash or credit or something else like that. Still has a ways to go to really be there. But some other things could still, make it through with the existing tech. They don't have those kinds of demands to make them work.
Mm-hmm. Out of everything right now, and kind of considering this pretty big downturn that we've had and altcoins getting crushed, are there any particular sectors, areas in the crypto markets that you think are going to provide maybe the best opportunity come time when things start turning around? This is like Killer's favorite question.
You beat him to it.
Yeah,
I was literally just about to ask it too.
I'm. To me, I think some of the if we talk about like sectors, like the kind of the applications, like you have the weird research coins, and then you have is that what we're talking about basically?
Yeah, you get everything. You got these you got the exchange tokens. You got
okay.
Yeah, the works.
All right,
privacy coins.
Yeah, I think when this bear market finally ends and we go bull, I think Binance's token is going to be something you absolutely have to have, because that place shits money in of itself, even during the bear market. And once the bull market happens, it's something that they can leverage to incentivize their user base. So, they're pretty savvy with what they're doing. Plus the reduction in trading fees and all that stuff. It kind of almost pumps itself in the end. As far as certain sectors, I haven't seen anything that's kind of withstood this bear market. Everything's gotten kicked in the teeth. So, everything is going to bounce back to a certain degree. It's hard to say which ones end up bouncing back the most, because right now, I'm been trying to figure out what this next bull market's going to look like and what's going to cause things to move and make people believe that a altcoin actually has value. So I'm thinking that almost irrelevant of the sector, any coin that has somehow managed to get a real world integration that is gaining use will look legitimate to a lot of people, especially the next wave of people new to crypto. Anybody who can make a legitimate claim, because you've all seen the fake claims, so and so is partnered with X. Well, anybody that actually has that and has their blockchain being used by a legitimate company, I think they're going to do very, very well regardless of what sector they're in.
Agreed. Yeah.
Hey Rogue, before we started recording, you had talked about you were messing with some of your bots. That's something we really haven't talked about much on this show. So maybe if you could dive into what just I guess talk about the bots kind of in general. You don't have to give anything you don't want about them, just kind of high level overview if you could.
Okay, sure. Part of the downside of trading is that you have to actually sit in front of your computer and trade, I guess. Like if you're not actually analyzing charts and making entries and taking exits, you're not making any money. So, if you want to go take a vacation, your income essentially drops to zero, which is not ideal. And that being said, we all have our own biases and we looked at things differently and we do dumb things because we're all human and we tend to be idiots. So I got really into the idea of, creating algorithmic setups. Everybody trades certain, because you can take most trading things and find an algorithm, whether you trade a certain MA cross or a B-bands touch or whatever it might be, you can find profitable indicators that provide a signal that will facilitate a winning trade more often than it makes a losing trade. So I kind of got into that, went into TradingView, learned their Pine script because I have a background in coding and web development. So it wasn't too bad, and just really got into converting, some things I had known and some things I had found to work out pretty well into TradingView alerts and strategies. And then from there are a bunch of different plugins, APIs, stuff like that you can use to connect to the various exchanges, so that when your buy or sell signals hit, it initiates the trade for you, and you can hopefully just sit back and make money if you've done your due diligence and you've tested it right and you know how it works, and you make sure it's going to set up stop losses and all those fun things. So obviously those work great for like margin trading. They work really well with, because you can obviously short and long. For altcoins, most altcoins are pretty much buy only markets, so you got to be, for those who, not everything's going to work very well. I mean, almost anything works in the damn bull market, because of a long enough time frame, they tend to be trading up.
Mm-hmm.
But having an algorithm that can trade a downtrending chop well is a whole nother story. But the general idea was to at least supplement my manual trading with some automatic trading. That, and we're not talking like crazy returns. If my bots combine for like 5% a week, I'm pretty happy. 5% of total trading volume. That's a pretty good week.
I was gonna say that seems pretty awesome if they can do that.
Yeah. Obviously, it's up and down, hits and misses, but
Yep.
Most of them don't end up in the negatives. Sometimes they eke out a little bit of profit, because people always forget things like trading fees chew into your profits and things like that. And sometimes, I find a lot of people new to it don't know how to back test a trading strategy properly, so they end up implementing a strategy that actually isn't profitable. I spent I want to say I had these things running for like 2 to 3 months, effectively paper trading. Whereas I would just take the signals as they came in at the end of the day and just map them out to the price points on the chart to see if it made or lost me money, and then revise it, per algorithm, per coin, to kind of get them working. So that I wasn't losing money.
That's great. Now let's talk a little bit. So I know most people. I guess I kind of lost where I was going with that. I was going to ask something, but I think we already kind of talked about it. So
the algorithm. So would you have been able to do that? Would you say, if you had no coding or programming experience, or are there any resources for somebody who doesn't have programming experience where they can create an algorithm or back test it or anything like that?
Yeah, the TradingView has a lot of tutorials for their Pine script. And you can obviously find other people's example scripts. The problem is if you aren't a coder, you're basically the trading equivalent of like a script kiddie. You don't really know what you're doing or how to manipulate the outcomes properly. So it's not a difficult language to learn compared to a lot of them out there. The hard part is really understanding the technical analysis side of things, and how tweaking those impacts the results of the algorithm. Because it's easy to write like a MA cross script in TradingView, but it doesn't do you much good if you don't understand the basics behind MAs and why the crosses work and stuff like that. So you got to have a decent background in both, or else you're kind of just A, hoping it works, and B, you're going to be unable to adjust your algorithm once it stops becoming profitable, because at some point in time the profitability is going to start decreasing, and you're going to have to get in there and kind of overhaul it to get it back up to speed.
Rogue, I wanted to touch on a question we had from the chat that I think is interesting, and I think it's something that everyone's probably wondering about now. The question is, Since you have lived through it before, how do we know the market is about to turn? Can we know it has turned, or what signals would you look for in regards to that?
I mean, the signal last time was Cobain tweeting that he was opening a long to see what it would feel like to lose money, and that was legitimate. Him buying the bottom at like 180. I shit you not, I was there as it happened in real time. It was impressive. You know, I've been reading up a lot about this as well, because obviously this matters to me. I want to know where the bottom is, and everybody talks that you want this massive capitulation, wick down that looks like it's the crypto equivalent of Ragnarok, end of days is happening, we're all gonna die, yada yada yada. And I could definitely see something like that playing out. At the same time, I could also see it not, just simply because there is so much more money in this space than there was last time we crashed to under 200. It's kind of stupid. I'm of two minds of it, because I feel like at some point, if they drive the market too low, it's just going to look unappealing to the next set of people interested to getting into crypto. It's fine crashing a market when it's just kind of a small subset of people. I mean, I'm sure if you looked at the actual market cap that it held last time it crashed, it was tiny compared to now. So they're basically balancing the ability to maximize suffering without kind of destroying any chance people have of a hope of recovery. So there's a good chance the bottom's already in, and they're just basically bleeding us out here with some disgusting chop. And this giant capitulation wick we're all looking for is going to end up on like the monthly candle versus just the daily. And then it's just going to be, and everyone's going to look back a year in hindsight and say like, oh, it's clearly a capitulation. That second week in December, that was a capitulation wick. It's clear as day there. But it's one of those things you don't really see it until long after it's happened.
Oh yeah, totally.
So as for like the exact signal, hey man, I wish I knew, because I'd have my bud set right where that is. I'm just trying. To me right now, the biggest thing is not to get caught with your pants around your ankles. Don't just, catch a local bottom and think this is it, we're going to the moon. Maybe you caught the dip to the bottom at 3,600, and you're like, well, this is great. We're not too much above that now. So like right now, your goal is to take your smaller profits where you can find them, play the ranges. Like, if we look at every recovery, when this thing moves, you're going to have time to catch it. It's like trying to say you never had time to get a long in last year when we went from 1,000 to 20,000. There were so many pullbacks on that ride up. It was ridiculous. Oh, yeah. So, too many people here are obsessed with trying to, for some reason, they want to ride this whole wave, right? Like, well, what's the bottom? Is it 2,000? Well, I want to get in there so I can ride that entire thing to 50. It's like, why? Like, my dude, right. When that thing reaches 10, you're selling anyway, because you're like, it's 10,000. I'm taking my money. Like, you don't need to catch the absolute bottoms and the absolute tops. I mean, that's where graveyards are made. The safest place to long Bitcoin, quite frankly, is when we clear 6,000 again. Because because we're in a confirmed uptrend and we've broken through the biggest resistance we have. That's like if you're looking to buy for the next bull run, like wait for that. But otherwise, like if you're out there and you're trading, this price action that we're getting, take your setups and just take your profits and just wait for the next trade. Don't try and hit these home runs, because you're gonna strike out real fast.
I think it's partly like an attention span thing too, and like a boredom thing too. Like I find myself just like, I don't know if it's the age of technology we're in where there's always a distraction, but like a constant need for like stimulus. Like I can't just stare at a wall for 5 minutes. You know, it's like it's just always got to check Twitter or check this notification or open up a trade or and I think a lot of it stems from that, a lot of bad trading. I think touching on the question that you were answering in terms of when the bottom is in or when the reversal is going to happen, I don't think there's like a set point where you can be like, oh, that indicator, yep, that was the bottom. I think it's more just like you take a look at the cumulative picture and you're like, okay, like we've been flat or just like disinterested for like a year now. You know, maybe the recipe is there or the ingredients are there for a turnaround. And I think that's really the main thing I'm looking for right now is just like a flat, boring period for a while. And I thought we had that at like 5,500, 6,000, because we did stay at those levels for about like 2 to 3, maybe 4 solid months. Probably not 4, but it was a good like couple months where we basically didn't move within that range bound area. And I was starting to think maybe this is like the boring flat bottom. And I think there's no substitute for just seeing how it plays out. And that kind of speaks to your point of you don't have to catch every move. If you can trade 80% of the range, whatever that range is, then you're doing well. You don't have to trade 99% of it. You know, you don't have to trade 95% of it. And that's how you really get wrecked. And that's what I tried to do on the way down. And it was awful, you know, but it takes some self-control.
A lot of self-control.
Yep.
I think we always try and say that too, Rogue, is, you know, we try and tell people. So I really like that, the quote you said, you don't need to catch the exact bottoms or tops. That's where graveyards are made. So, you know, just reiterating the fact that, and also to touch on, you don't have to ride the whole thing from the exact bottom to the exact top. If you're not, you know, if you do get in at even, 3,600 and you don't take profit when we're busting through 10K, then, you know, you maybe really need to reevaluate yourself as a trader. And, you know.
Right. I mean, catching bottoms and catching tops is really for bragging rights for the most part. But you know, if you've read anything on trading literature, it's like nobody really gives a shit that you did that. You know, most professional traders and people that write those books would effectively laugh at you for trying to even be the one to call or predict that. It's because they're shitty setups for the most part. So it's like, so yeah, they're not the ones you want. You want that middle range, the safe moves. You know, kind of riding the trend over whatever it might be during whatever time frame you're currently trading in. You know, they're all trending in certain directions. So kind of ride that trend and get out when the trend stops and just rinse and repeat.
Yep, exactly.
Is that like I said, those small profits like that add up over and over and over repeatedly. And at the same time, don't forget what the larger trend is. Crypto Twitter is notorious for it. As soon as we get a bounce, you know, we go into the moon, and as soon as it dips a little bit, it's like, oh, we're going down. Like, you know, right now we're still in the bear market, so the trend is down. So like, your safe bet is to short a bounce. End of story.
Yep.
Like, that's statistically speaking. And I actually wrote a script that only shorts lower time frames during higher time frame downtrends, because, like I said, those are your that's the statistically the best trade to make. So we're in a bear trend until we're not, and as you guys mentioned, I do expect a whole lot of sideways at some point. I'm not sure what price we're going to be at, but we're going to get sideways. Hopefully, it's not that boring sideways we had in 2014, 2015, where we were lucky to get $20 moves, but the price was like 300. But you know, the action we've been getting the past like 2 weeks has been pretty fun to trade as far as the volatility goes. You know, especially at the price we're at. You know, it's moving $100 to $300 a day, which is damn near 10% move a day. You know, those are really good for your swing traders and your scalpers to make some nice profits on.
Hey, Rogue, Needlecoin's in the chat and wants to know about staking in a bear market.
Yeah, buy cheap staking coins in the bear market, and then give me a call in 2 years, and we're in a bull market again. That's like it. Like unfortunately, had you bought all your staking coins at the height of the bull market, you're so underwater right now. It's not even funny. But the kind of the long-term ROI on staking coins, provided they don't get delisted somewhere, so you got to be careful about that, can be really good. Like the best play from the last bear market to the height of to this last bull market was to have a Dash Masternode and just to leave it on autopilot, because those things became worth a fucking fortune when we skyrocketed. But the returns on them were really low because nothing was valuable and we were going sideways forever. So I like staking coins as a kind of a if you've got some spare BTC lying around that you want to put aside outside of trading, you can pick up a promising staking coin or a promising masternode with a solid team behind them and just kind of let it do its thing during the bear market, the long sideways, because it doesn't cost you a whole lot versus buying it at the top. I remember when the Zcoin released their Z nodes, and those things were worth like, what was this, like 170,000, something stupid like that, for a full node. Now it's worth 8. Okay, but so let's look at the reverse. Like, you can pick it up for 8. Let me see. I have my notes. I have one that I accumulated this year. And right now, in dollar terms, it makes about 100 to 200 a month. It'll cost you current value is $6,500. So it's like almost 2 BTC. It generates on average, we're going to say like 125 a month based on current prices. So obviously you can just stack that, and in a year from now, when Bitcoin is maybe worth 15,000 and Zcoin is maybe worth 4 or 5 times what it is, what its current value in BTC is, which obviously is a multiplier effect. It goes up against BTC, and now BTC price goes up, so it's up like if Zcoin goes up 5 times against BTC, BTC goes up times 3. All of a sudden, your masternode is up times 15. You get this really, really nice multiplier going on for you there. And all of a sudden, that that $6,500 investment looks really good. And that's what a lot of people did with Dash the last bear market. So it's you gotta pick your projects well, and you just gotta kind of just set them up and ignore them and not really worry about them. The nice thing about staking is that staking is compounding. The more you stake, the more coins you have to stake, the more rewards you get slowly over time. With masternodes, you kind of, some masternode coins you can stake your rewards. So you can set up a separate wallet where you just move your staking rewards or your masternode rewards to those stake themselves. So you're kind of trying to make profits on both ends. But if you pick a decent project and are comfortable with it, possibly not doing anything for a year, and you're able to say, yeah, I'm not going to touch that for a while, it could pay off very, very well for you in the long run.
I guess the main thing is, like, you want to be damn sure that it's a project that's going to be around in like a couple of years. You don't want to stake and earn all these coins that end up being worth nothing, and the opportunity cost is huge. I still remember, Prince, do you remember us looking at Zcoin masternodes and like during the downturn, and it hit like $40, and we're like, oh, it's a great deal here. Like, how much further could it go? And then same thing at 20. We're like, wow, it's an even better deal. Fast forward, we're down like 80% from there. But I think that's a good example, though. Zcoin is I think that is one with a use case. I think that's just really the main thing you have to look for. But I do agree with the overall premise. If you're basically forcing yourself to dollar cost average and you're compounding at whatever frequency you're adding to the staking balance, I think it's a no-brainer. You just need time and really a solid project that's at the very least not going away.
Right. And for the most part, most of the altcoin market has pretty much bottomed out, at least the non-ICO coins. I think a bunch of ICO coins are still going to keep on falling until they die. Yeah. But none of them are staking or masternodes really. So and I say that because I've been watching their reaction to all the recent BTC moves. When BTC dropped 40%, they did not drop that percentage in kind. Some of them still took a hit, but there were plenty that kind of had a minor dive, and they've all returned back up to where they were before that awful week in November happened. So they're holding up quite well. Like if you're going to try and accumulate one, now's the time to do it. I've been kind of perusing some of the projects out there to see if there are any more that I want to add to kind of my Masternode staking portfolio and hold on for the long run here.
Hey, Rogue, one last final question. A couple of people have asked us in the chat. So in your opinion, when we do reach that next bull run, do you think we'll break all-time highs, like speaking of Bitcoin, or do you think people will remember, not selling in 17, not selling on the way up and maybe sell a little prematurely?
Oh, people are going to sell prematurely for sure because they're scared we're not going to make it. It happens every time. It's to me, it's like you can take some off the table if you're comfortable. But it's kind of the same thing if you look at bottoms. You get the kind of same mentality in reverse. People are now like, oh, I'm going to get out before it goes to zero. But it's not. So I think the old all-time high is going to be a great spot to shake a lot of people out. Yeah. Before the next move up, because I remember the reactions of a lot of people that bought all-time high last bull cycle, and when we got back up to the 1,000 to 1,200 range, lots of people sold because potential long-term double top, yada yada yada, all these dumb technical reasons, and that was, we went times 19 from there. So it's going to be a great place to fuck people over. I think we'll blow right through it. Like after some charting shenanigans and some wicked volatility right around there. But I think we'll end up and we'll, at some point during the next multi-year bull cycle, we will go right through 20,000, no problem.
I think it could compare to when we went to 10,000, broke through that. Everyone on Twitter was kind of thinking, myself included, maybe a little bit, that once we'd hit that 10,000 mark, markets have such a psychology about them that, like I deal with commodities a lot, and everyone always says for $4 corn, a lot of people are selling at $3.99, $3.90, just because the market psychology on $4. So once we hit that 10,000 mark, everyone was like, oh, we're gonna test it and fail, and then we just literally shot through it. So I can definitely see the same the same correlation with that 20,000 mark next time we get there, which is whenever that is.
We're going to see it first when we make the climb back up to 6,000. Basically, if you want to know what's going to happen when we get to 20,000 again, watch what happens when we get to 6,000.
There you go.
Pretty much the behavior, both people's reactions and how that their response to getting up there, and the movements on the chart are going to be very similar, just because of the fact that it's a key level, both technically and psychologically. So if you want kind of a trailer sneak preview of some of the potential action at 20,000. Watch the uptrend to 6,000 and take some good notes as to what you're seeing out there, because that'll come in handy however many months, years down the line when we clear 20,000.
Great. Well, Rogue, we're kind of out of everything that we wanted to talk about. We covered an enormous amount of content, so it was a really great episode on our end, or on your end. I'm sorry. So, is there anything that you kind of want to throw out there before we sign off?
No, man, like this downtrend sucks, but it's markets work in cycles. So whenever it ends, it's gonna end. Don't try and time it. Go out there, you know. There's plenty of coins that are moving right now, guys. Don't like sit there and think it's all doom and gloom. Freaking Factum went damn near ×5 while Bitcoin was shitting itself. So like you can't say that there's not money to be made.
Yeah.
So go out there, dig the charts, go find your setups, go make your trades. There's still plenty to be had. Don't get down on yourself too hard. Bitcoin will turn around. It's like I said, markets are cyclical. We all should have expected it, but most of us didn't. At least we didn't expect it was this bad, and so none of us planned for it, and that's fine. It's a good preparation for next time. You know, you're going to be ready for the next bear market when it happens.
Right.
But other than that, you know, go out there, keep trading, and you can catch me on Shitcoin Talk if Dumb ever wakes up in the afternoon on time.
Shout out Dumb. I love that guy. But yeah, Crypto Rogue, you can find him on Twitter at Crypto Rogue. Thanks again, Rogue. It was a great episode. Learn from your mistakes like he was kind of elaborating on. So tip your waitress, Hootskis are for the boys. Thanks for listening, everyone. Make sure you go like, subscribe to our iTunes and YouTube. Take it easy, guys. We'll see you.